currency that investors can rely on. The Zimbabwe experience has been a transitory experience, all building towards a stable currency that will be issued in future. Argentina has been impacted by the whole emerging markets, volatility being driven by hardening monetary policy globally, obviously mainly driven by the US. Turkey has been impacted. South Africa in terms of rand has also been impacted. So you have a slew of different factors impacting these global emerging markets and not quite Zimbabwe. Zimbabwe's volatility has been driven by internal factors, but also some external factors.
Just end by saying that as the press thanking you, I also want to leave you with one food for thought, that there's a difference between money and cash. There's a difference between money and cash. Not all, see, when business is being done, they are in business to make money. Cash is one component of money. But in Zimbabwe, it appears that money is equal to cash. That's not true. I just want to ensure that the market and you've asked me, my friend here, about the cash, the layman, their take, is to tell them that there's a difference between money and cash.
This week on Biblenomics, we're discussing the economy, what every Zimbabwean needs to know about how to deal with the difficult times that we're going through. With me is Arnold Lamini, a stockbroker with Bank ABC with over 15 years in banking. So Arnold, what is the state of our economy and why?
I think that's a very, it's a big question. I think our economy, to put it in a nutshell, I think it's in a coma. I'll say it's in a coma, and look, it needs to be resuscitated,
right,
and badly and quickly.
Arnold, why would you say we're in the space we're in as a country?
I think it's a whole lot of issues. I think the key ones, the ones I'll say are key is obviously bad behavior from from maybe the leaders. Also, you and I, just generally from everyone. I think it's a decay in the culture also that has come in. We've seen a lot of corruption starting to creep in, and at the expense of actually bettering the economy. So we haven't been sticking to the plan or sticking to the book in terms of how we should operate as individuals or as an economy or as the leadership. So I think this decay is actually, how can I put it? It has actually deteriorated into being the core of the culture that we're in right now.
Speaking in terms of the culture that's creeping in, Arnold, on the 1st of October, the RPZ issued a new policy statement for the second half of the year. What would you say about the policy from the previous 6 months? Was it a success?
Look, I think what has been happening, I'll say it's been caretaker sort of care and maintenance type of approach to every sort of trying to reorganize the economy and trying to sort out any problems that are there. So whoever was in place and they were coming up with policies that were looking at probably short-term measures to just deal with the symptoms, but they were not really addressing the core effect, the core issues to the problem. Yeah, so I think, look, in a way, in the interim, things were happening slowly, but I think in the long term, we didn't see much change, I think, to the economy.
Okay.
Yeah.
Okay. What exactly is the Reserve Bank's mandate?
Central banks, I think for the central bank, I think its core issue, it's at the apex of the financial system, and they're responsible for the flows in terms of managing the money supply of the economy. The job of the central bank is mainly to monitor and also to interject if possible where there's how can I put it? There's actually improper behavior from the monetary financial system. So they pretty much manage what the banks do and the flows in terms of what amount of money is actually flowing between the systems, and their approach, their basic job is really to manage their local currency. Yeah. In a way.
Okay.
Yeah.
Speaking into RBZ's mandate, we saw that in the current policy, the RBZ went on to explain that there is going to be nostro accounts and RTGS FCAs. Now, the RBZ also said that the policy was set in place in February, yet we only saw it 8 months later, the central bank claiming that the banks are not transparent in implementing this policy. Now, would you not say that the central bank in itself was complacent in letting the banks go unchecked 8 months later?
Look, I won't answer for the Reserve Bank, but yeah, certainly I think, look, there's been a lot of shortcomings, I think, from the regulator of the banking system. I think their real problem is they can't really perform their full mandate, given the status in Zimbabwe. Zimbabwe is operating on without a currency, a local currency.
Right.
So, giving them that blame to say, look, they can't. They were also part of the problem. Is pretty much. I think it'll be an overstatement. But I'll say, look, they tried their best in whatever condition they are in currently. But technically, it's impossible to effect their true mandate as a central bank in our current situation.
Okay.
The multi-currency situation, we're using other countries' currencies.
Right.
So if they're to actually execute, they need to have their own currency in place to do that.
Generally speaking, we see the function of the monetary policy in two types. Either it's expansionary, whereby the policy seeks to increase money supply to lower unemployment, yet encouraging consumer spending and private sector borrowing to spur the economy. Or it can be contractionary, where we see decrease in money supply to control inflation. Now, it's no secret that our economy is in need of both. We need the unemployment rate to go down, but we also need to see a control of inflation. What would you say are the intended results of the monetary policy from the Reserve Bank?
In a way, I think you'll say the tax that was introduced, the 2%, for example, it's purely just to earn more revenue for the government. So it's pretty much siphoning some of the revenue that's circulating within the system.
Right.
Yeah. So you could say, yeah, it's a contractionary in a way, but again, I'll revert back to the purpose of the Reserve Bank. I think it's just a short-term solution, but it's not the full bouquet for the monetary fathers to actually exercise their mandate. I think they have no capacity right now, as is, to actually exercise that mandate. As I alluded to, there's very little they can do, especially when we're using other countries' currencies. So I'll say this is just a temporary measure to sort out whatever problems that we have. It will probably raise more revenues for government to then deal with its problems with deficit, with local deficits that they have, the borrowings that they have. So the 2% tax will probably address that. Yeah, so I'll say, look, it's in a way it's a contractionary. It will just siphon some of the money in circulation.
Okay.
Yeah, for use by government.
The governor actually explains that the economic prerequisites for currency reforms are not in place, Arnold. Are there any advantages of using foreign currency over, creating our own local currency?
Look, it's in a way. I think in a normal economy, obviously, if you have your own currency and it's benchmarked against other currencies, and you have a normal exchange rate, a free market system to actually transact in any currency. Yes, foreign currency is good. I mean, if it's used to measure also your local currency. But for actually developing your own problems or actually solving your own problems, I think it's not a good per se situation. It's not a good position for the economy, as you are limited in terms of decisions that you have to make. You are not really in control in terms of how you can supply and how you can intervene in terms of actually ruling over that currency, because it belongs to other countries. So for development purposes, I think localizing the consumption, if it's localized in terms of what currency is used and it's local, I think it helps to create that impetus within the local market. But then if it's then accepted across when it's pegged against other countries' currencies, then yeah, it then has that added value for cross trading as well.
Okay.
Yeah.
It is a fact, though, Arnold, isn't it, that there is no depositor at the moment who can withdraw US dollars out of their bank without making prior arrangement with them, meaning that over 9 billion worth of depositors in our bank accounts is bond note. Now, how practical is it for the government to be able to sustain demonetizing the bond while preserving the value of 1:1?
I think for me, the 1:1 is an illusion.
Right.
Yeah, it depends what you want to believe, but I think what we now starting to see is government is now coming back and opening the market, freeing up all the markets, and leaving it up to the markets to determine the value.
Right.
So that should be the normal status.
Right.
Yeah, 1:1. I think. Look, it's a good to have sort of position we want to be in, but look, to me, it's just an illusion. And yeah, with the bond note, again, it's a question of confidence around it. If that confidence can be restored, yes, it can then earn its value as well, and then can possibly naturally gain that 1:1 rating. But currently, there's no confidence around the bond note. Sorry to say, but and yeah, it's been given its value by the market. So you find price discovery from the market is telling you what exactly that value is. When you go into your parallel markets, you find, yeah, there's that disparity in the valuations.
Right. And what do you think is the future of the bond note as we stand now?
It depends on how how the confidence is built. Yeah, if all of this is, I think, is sitting with the confidence, and then also
Confidence of whom or of what?
Of just the general populace and just the markets and whoever is using that currency for transacting. If that confidence can be restored, there's been a lot of a lot of lack of trust between either what the authorities are saying and what the man on the ground is actually exercising, or what is actually they are achieving with whatever the currency they're using. Right. So if that trust can then be restored, I think that's where the problem is. I think if that trust if an announcement is made today and it sticks and it sits with the people and they accept that announcement, then yeah, I think value can be restored in the bond note.
Okay. I'm going to put you on the spot, Arnold. 3 weeks later, since the monetary policy was released, has there been any evidence of policy boosting confidence and transparency in the foreign market to rein in inflation?
I don't think so. But again, look, in terms of the announcement and its purpose and what its intentions, I think, look, in a way, it was trying to address, short-term measures. But again, it was countered by other behaviors within the system, which then accelerated this greed and sort of opportunities for other players who saw it as a loophole to actually increase panic within the economy and then trade on that panic. So we've seen that. So unless we solve that, I don't think it's working. Yes. Yeah, it's created that opportunity for the speculators more than it's achieving its purpose.
Right. Arnold, how has the government made its priority to deal with the fiscal imbalances, as far as you can tell?
I think in the statements that they've made, they've committed to address the runaway expenditure levels in government. So up until they can do that, it's a statement, but we wait to see if it's done. But I think that's the right direction to be taking. Yeah, I think, look, we haven't seen the correction yet. I think we still have huge RTGS balances. I think the salaries are still too high in terms of their relation to the GDP of the economy. Yeah, for the civil servants. So I think it won't be an overnight correction, but because the statement is out there, I'm happy it's out there. They've said it. So it's up to when it will actually be achieved. Yeah.
Arnold, Mr. Manguja prescribed that the country needs to live within its means. Now, factoring our GDP, what does that even mean?
Okay, Tekna, maybe I'll take you back to finance. I don't know if you've done accounts. It's possible. Okay, eat within to live within what you can produce. What you kill is what you eat. Where the dollar that you make is what you spend. Currently, unfortunately, our current expenditure, which is our current asset, maybe if you're looking at it from the finance side, is more than our current assets are less than the current liabilities. Yeah, so what we are spending or borrowing is way too high.
What is an example of getting a hold of our excessive spending or excessiveness?
Yeah, I think as already said by the Minister of Finance, I mean, cutting down on obviously the biggest hegemony in the spending is the civil servants' payroll.
Right, so that's consuming the majority of...
Yes, 90%. Yeah. Right. Yeah, of the revenues, it's 90% of our revenue. So yeah, if that can be brought down, but obviously it's got social effects, and we've got to come up with a soft landing for the civil servants in terms of how we then rehabilitate them, or in terms of reaccommodating them without actually disrupting their living, social lives in terms of, yeah. So if government manages to reduce that quickly, yes, it may solve our problems early, and we may come within our budget. But again, another solution is actually to ramp up production, exports, and raise revenue. So that's the other solution that can. We may reduce that 90% to 30% by actually growing our revenue faster than the spending.
Right. Arnold, the governor also reported that there's positive growth in mining and agriculture. Can this alone spill over into manufacturing and distribution enough while foreign currency continues to elude us?
I think in the long term, yes, definitely. But mining is a long-term play. Right. It's not an overnight correction. Agriculture, again, I think we are so wounded in that area. We've got new learners in terms of the farmers, the small-scale farmers, who are trying to catch up with modern farming to actually ramp up the volumes that are needed to actually grow that capacity for the economy to then drive. So I think it's a medium sort of long-term solutions. We are driving in the right directions. But then maybe minings, as we have more new players who are taking up these, what do you call it, the mines, who are buying into the right to actually mine certain minerals. Yeah, we've seen the new mineral that's coming, which might actually drive more revenue at source when they bring in more capital. Okay. Yeah.
Has there been an increased business confidence post the highly contested elections?
Look, it depends. Yeah, look, it's difficult to say. But if okay, for example, if I were to judge it from the stock market, where I trade a lot, there's been significant growth in terms of the market cap. Yeah, after the announcement of the monetary policy, it grew from about 12 billion. This is from 1 October and to some 22 billion in 5 days. Yeah, but again, it's a question of then reviewing to say, okay, what actually pushed that growth? It was actually inflationary. So whether it's confidence, you need to then rebalance it and see if there's that confidence. But I think there hasn't been any confidence much, except your speculators also come in to then take an opportunity from what. So what we have is government trying to implement certain policies, but there hasn't been that support in terms of the general. People are looking for opportunities to actually make money, and I think this is an ingrained culture now that's there to actually develop more money quickly than anything.
What do you think is the current investor perception? The governor reported that we will see a 5% growth. Will we really see a 5% growth, Arnold?
Obviously, 5% is a number and could be driven maybe 2 or 3 mines. If we're talking billions and if it's a strong mineral, yeah, so perhaps that is valued in that context. Right. But in terms of whether it then brings the per capita on the individuals on the ground is another thing. So we probably need to look at the per capita income of individuals. So I think the projections is 2030. Government is giving itself a 2030 sort of projection for a per capita growth to a 3,000 level mark. So yeah, the 5% I think could be achievable, depending on where the investments come. Obviously, we are sort of like Zimbabwe is sort of like is not in a clear position in terms of direction. So from the foreign side of it, I think they're all taking a fence approach. Right. They're watching, wait and see approach, and yeah, there's that interest, but a wait and see approach to see if commitment is there from government. Okay. Yeah, and if that kicks in and there's that continuity in terms of implementation of what has been said or pronounced, yeah, we should see generally an increased investment outlook. What
do you think are some of the deep-seated disparities within the economy that have led to parallel markets and the inflationary expectations?
Okay, obviously your disparities are from the deficit imbalances. I think if you have that imbalance from the BOP level, it then translates to what then comes out on the ground. I think those that have a lot will obviously benefit, right. Yeah, as they can trade off that opportunity, that imbalance that exists. So I think, and then the other key area is obviously the culture which has deteriorated. We've all now, well, it looks like the general populace now is we all traders. Right. Well, from whatever reasons we have, we became traders, and it's trading is all about making a profit, quick money, and there's been that culture of wanting to make money today, and it's about me, myself, and I. So that culture also then accelerates the growth in your grey markets in terms of the parallel market as well.
The Reserve Bank governor also listed a couple of financial institutions that are willing to fund our monetary policy. That includes GIMCOP, IDC of South Africa, AFDB, and I think EcoBank. But there are no international institutions on this list. Is this a hindrance, do you think, Arnold?
Obviously, it then compromises the value of our asset in terms of our brand as Zimbabwe. But again, obviously, it's not easy to then reconnect yourself with those international funders, as they stick to the book. So there's certain things we need to first achieve before we are accepted back. And that's what we need to close off. I think mention of the close friends that we have, I don't know, it's perhaps, yeah, there's certain assistance coming from there, but I think it's also targeted to certain social services. We haven't seen key credit lines that are helping to actually boost the strategy that we have or that is being mentioned.
Right.
So up until we actually quickly re-engage or clarify or clear up whatever is blocking our re-engagement with the big funders, I think it's not a good position for the country to just have local or the African banks that are supporting.
Right. You mentioned that to get the international institutions involved, we need to meet their requirements. And I'm sure, Arnold, you would agree with me that includes servicing debts. Are we really servicing debts as a country?
We're yet to see, but for as long as that engagement hasn't materialized, I think I'll say, look, nothing has happened. Okay. It's as good as what we hear in the papers. Yeah, so there's a lot that's been mentioned, from mega deals to, so it's a question of whether the action is actually taking place. Right. We've had mega deals that have not materialized, and we're still yet to see the mega deals. Right. And we're now signing a lot of other agreements. But it's the day when we then start to see the materiality of those. Yeah.
Arnold, it's no secret that it is a very difficult season for every standard Zimbabwean right now. What would you like to say to them?
For me, I think what I'll say to my fellow Zimbabweans is to say, look, I think we've got a new government in place. I think we're just starting. I think these are baby steps into correcting. They are saying the right things. We want to see implementation as quick as possible. But also our expectation as a country, I think I've seen on social media, I think the expectations, some of them are quite ridiculous and quite high. We're expecting change like tomorrow. This is a process we've got to take. It's not going to be an overnight thing. It's not going to come like honky-dory. It's going to be, it's going to have some pain of some sort that we're going to have to take to address all the ills that we have in the economy. So I think to my fellow Zimbabweans, I'll just say, look, let's all brace in. Let's support the current government in terms of the policies that have been announced. I think what really is stopping progression is we find every announcement that is made is not correct. And pretty much what's on social media is the correct thing. And for example, all of a sudden, a whole professor in finance knows nothing. So I think let's give a chance to those that have been placed in authority, and let's see how they implement. I mean, it's a 5-year journey, so we need to live that journey as well. Let's allow the policies to come. I think that change will eventually emerge, and we'll see where we are going.
And there you have it. As citizens of Zimbabwe, we must embrace the monetary policies as they come and accept that the changeover is not going to be easy. It is one that has lots of pain and rigor ahead of us. Thank you for watching Biblenomics. See you next week.
FMTV.